Indian economy has emerged as a strong economy post the COVID crisis. Thanks to the jugalbandi between Reserve Bank of India and the government, Indian economy on a relative basis and also on absolute basis now clearly is on a pedestal positioning. But the challenges of yesterday are different, and the challenges of today are in a sense centered around inflation, geopolitical crisis, and a high interest rate regime. So to understand what is the way forward for interest rates, economy, growth, the war against inflation, it's my honor and a channel's privilege to have the Governor of Reserve Bank of India on ET Now. Governor, it's an honor to have you on ET Now.
Thank you.
My introduction, I guess, was an acknowledgement of the great work RBI has done under your leadership. We clearly have emerged on the pedestal post the COVID crisis. But the elephant in the room, Governor, is inflation. Has RBI won the war against inflation?
Well, thank you for having me on your channel. And at the outset, I also would like to wish warm good morning to all your viewers and namaskar. Now, so far as inflation is concerned, I think it is getting increasingly anchored. We reached a peak in at 7.8%, and thereafter the inflation has moderated in the subsequent 3 prints. The latest was 6.7%. And the inflation, why I am saying inflation and inflation expectations more, are also getting anchored, is because if you see, the all around the way the various analysts and the market participants are looking at the economy. We do a survey of professional, forecasters. We do a survey of investors. We do a consumer household survey. We do a consumer survey and a household survey. Now, all the indications, all the, the survey results are pointing to the fact that inflation is, expectations around inflation are getting anchored. And the bond yields also are, especially at the long end, they're also reflecting the fact that inflation is getting anchored. Now, for example, if you look at the 10-year G-Sec, now the 10-year G-Sec, before we started, before the, the May meeting of the MPC, when we started the current rate hike cycle by 40 basis points, just before that it was around 7.1, 7.12. And today it's about 7.28. Today morning I had seen it was 7.3. Now, so therefore the bond yields, especially at the long end, how they behave, that also is a reflective of, that is also reflective of whether inflation expectations are getting anchored. But I must also recognize that there are other important factors which are playing a role. For example, the softening of the crude prices, softening of certain commodity prices, and then the sort of the appreciation or the depreciation of the US dollar. US dollar, the Dixie, after reaching about 105, 106, it had moderated to about 104. Now it is again, it seems to be going back. So there are so many factors which are at play. But coming back to your question, I think as I have said in the monetary policy statement, I think at this point of time, according to our assessment, inflation has peaked and it is expected to moderate going forward. Inflation expectations are also getting well anchored, but we have to be, there's absolutely no room for any complacency. Inflation, consumer inflation is still at 6.7%, and we need to bring it down, as I have said in my minutes, first below 6% and then move closer to, the target rate of 4%. And so therefore, and with so many uncertainties, you yourself mentioned about the geopolitical, developments, the spillovers, how the dollar appreciation is going to happen, how the advanced economies which are facing, in fact, bigger problems of inflation, they are at 10%. UK is 10%. US has moderated to about 8.5 or 8.7%. Advanced economies, Eurozone is also facing the problem of high inflation. So how they are also going to adjust the rates and what spillovers it will have on the financial markets. I think there are several uncertainties, but just to repeat myself, inflation is moderating, expectations are getting anchored, and I think our macroeconomic fundamentals and the financial sector stability, they remain quite resilient. I think that was a pretty long answer, but I thought let me put things all in perspective.
Since you're a cricket fan, so I'm tempted to frame my next question around that. So can I say that Reserve Bank of India, in cricket terminology, is no longer fighting with inflation on the front foot, you've come on the back foot?
No, we always like to, choose the shot. We always like to our approach is to choose the shot depending on the, depending on each ball. I mean, in cricket, sometimes you have to play front foot, sometimes you have to play back foot. But by and large, in the last 2.5, 3 years, ever since the pandemic began, we have been playing in the front foot. And I think even at the current moment, we will play in the front foot, but when it is necessary, we will step back and leave out 1 or 2 balls and maybe go for a slight, a late cut.
So if I have to get your definition of interest rates now, you've tightened, and that was in T20 style. Now going forward, interest rate hike, will it be a function of test match play? The T20 rate hiking cycle is behind us?
Well, I will not be able to give you a forward guidance. I think that's a, very, you have put it very nicely. I mean, my compliments to you for putting it very nicely, but I will not be able to give forward guidance about our future rate actions. And people say that, you said that we played a T20 game. Now, if you actually look at it, it was, our approach has been fairly steady. It's not as if in May we cut the rates, we increased the rates by 40 basis points, then 50, then 50, in 3 installments we have done it. But look back what we did before May. In April, we introduced the SDF in lieu of the, not in lieu, but the liquidity absorption, the main instrument was the SDF, and that was at a 40 basis points higher than the reverse repo rate. So that led to an increase, a synergized, a synchronous increase in the liquidity absorption rate. The overnight call rates went up by about 40 basis points or so. Before that, we have been slowly and steadily pulling out the liquidity through the VRRR auctions, the variable rate reverse repo auctions. We have been pulling out quite a bit of liquidity even before that. So we were playing. Sometimes what happens is, there are certain cricketers, since you have used the analogy of cricket, let me say that I remember in the 70s when Sunil Gavaskar was at his peak. You think that he is playing a very slow game, but suddenly you find that he has scored a century. Yes. So sometimes, actions are taken rather silently, but they are not visible. So therefore, you have to really, over a time horizon, if you see, the Reserve Bank has been acting steadily, but because of this sudden development of the war in Ukraine, when suddenly the oil prices, the crude oil prices touched 130, then came down to about 120 and remained thereabouts, and commodity price markets were hit, the edible oil supplies were hit, fertilizer prices went up. Now there was a sudden spike in inflation. Now that sudden spike in inflation required that we increase the pace of scoring the runs. But we have been playing quite steadily. And going forward, I think the incoming data and the way the situation unfolds, as I described the inflation growth dynamics, how it, the dynamics of inflation and growth, how it plays out, that will determine our future action. Beyond that, it is very difficult, and it's not desirable also to give a forward guidance that we will stop or we will increase more or we will increase less, because you see it creates unnecessary expectations, and you may not do what you are saying today because the situation is so dynamic and so uncertain.
So Governor, for Reserve Bank of India, during policy making, what weightage would you assign to local cues, local factors, and how much weightage would you assign to global factors?
You see, our monetary policy, let me reiterate once again, are primarily determined by domestic factors. Global factors are important insofar as they impact the domestic situation. I mentioned about the war in Ukraine. I mentioned about commodity prices going up, the crude oil prices going up, because they impact our, domestic inflation. So therefore, we are primarily governed, we are primarily sort of influenced by our domestic situation. And of course, indeed, it's a globalized world where we are impacted by what's happening all around us. And naturally, we evaluate how each development is going to impact us and then prepare ourselves.
Governor, there seems to be a departure in the way how RBI now is much more nimble. When you have to open the floodgate of liquidity post-COVID crisis, Reserve Bank of India went all out. Everybody feels that you are behind the curve, but our channel view is the Reserve Bank of India is not behind the curve in terms of interest rate hike. My question is that, is there a departure at RBI in terms of being much more nimble, much more dynamic?
No, whether there is a departure, it's for people like you to judge. But I think as an institution, there is a great amount of consistency in the overall approach of the Reserve Bank, in the sense that the focus of Reserve Bank has always been, the overarching focus of Reserve Bank has always been maintaining a financial stability. You look back at any point of time, starting, let's go back to the early 1990s, when the economic reform started, or around the year, the Asian currency crisis and thereafter. I think all actions of Reserve Bank have been sort of consistent in the sense that the focus has always been on financial stability. But specifically to address your point, we are nimble because we had to be nimble, because the situation warranted that. The COVID pandemic, the virus came all of a sudden. Nobody was prepared for this kind of a shock to the global economy. Suddenly countries around the world went for lockdown, and you had to act, and you had to act quickly and effectively. Now, just as when things were beginning to look, were coming under control on the COVID front, thanks to our massive vaccination drive and, the other measures taken. And also the financial sector was also, it held on very well. And I must also mention that the financial sector held itself on very well because of several actions which the Reserve Bank has taken. Then you had the problem of the war in Europe, the Ukraine war, and that was also a sudden development. And before 24th February, nobody had expected a war of this magnitude to happen and to last so long. Naturally, it has produced impact. So over the last 3 years, the situation demanded that we had to act in a very nimble manner. I remember when COVID, in the initial days, around March 20th or so, I mean, the incoming news was very disturbing. So therefore, even before the lockdown was announced in India, we had put together in the Reserve Bank, within a matter of 4 or 5 days, we put up that, the quarantine facility, and all our market operations were undertaken from that quarantine facility, outskirts of Mumbai. So we were trying to be as proactive as possible. And I think the lockdown was announced on 25th of March, 25th March 2020, the first lockdown.
Yes.
And we made, on behalf of the RBI, I made those announcements on 27th of March. Similarly, when the war started, we were watchful, and in April, we took a number of actions. Other than a rate hike, which I think the market was expecting, or some of them were even expecting. No, market was not expecting, but I think some analysts were expecting. But effectively, we took several actions on 6th of April, including the introduction of the SDF. Then we, several other measures we announced. We changed our priority, the sequence of our priorities, from growth and inflation to inflation and growth. So therefore, we have tried to be nimble as possible, because we are as nimble as possible, because we are living in a very dynamic world. And, we are living in a dynamic world. And unless the central bank also becomes a dynamic organization in terms of actions as necessary, it cannot be action for the sake of action, but actions as necessary, I think it's, we have to be in tune with the times, and also we have to anticipate emerging developments and always remain in sync with the times. Today, I think the debate around whether RBI is behind the curve, I think that debate hopefully has ended, and I am happy that your channel, you say, has been of the view that we are not behind the curve. So thank you for that, at least for perhaps sort of appreciating, not perhaps, I mean, anyway, let me leave it at that.
Okay. Governor, in your MPC briefings and at various public forums, you often refer to the US Fed, the interest rate trajectory which they followed. So we know your thoughts on US economy and the interest rate curve they are following. But the elephant in the room, sir, according to us, is China. How closely are you monitoring China? Big economy, it's going in a different way, and it is something which will have an impact on how things would move now going forward.
You see, US I refer to because there are several federal governors. One statement comes out from one governor saying that, that particular governor believes that there should be, tighter, there should be bigger rate hikes. After 2-3 days, there is another observation. Now, they do influence the market. Now, Friday, the US Fed chief is going to give a speech at Jackson Hole, yes. And you see the kind yes. of expectations that are building up. I mean, there's one school which are expecting that perhaps he will give a hawkish message. The other school believes that he will not be as hawkish.
What is your personal thoughts?
Frankly, I don't know, and I would not like to. I would not like to prejudge him, because they are also facing the kind of uncertain situation as we are facing. And but coming to our bigger neighbor, that is China, you are referring to. Yes, we are watchful of all the data. It is the second largest economy, and we are watchful of the data coming from China and how it will impact our domestic economy in terms of domestic manufacturing, in terms of if Chinese growth slows down, what impact it will produce on global growth. All these things we do monitor very closely. We monitor the global developments, and as a part of the global developments, we do monitor the happenings in all large economies like the US, the Eurozone, China, Japan. We also, do monitor what is happening in Africa. Now, in all this global debate, we don't hear of any mention of Africa. I mean, it's a huge continent. And we have to see also what is happening there. So we monitor on the global scale all the large economies, but at the same time we don't leave out any area, which may not look very important. But tomorrow, if there is a food crisis in, let's say, in parts of Africa, naturally it will impact the global, the global cereal prices. For example, like when the wheat from Black Sea region, when the supplies stopped, suddenly there was a decline in the supplies. Naturally, the food prices, the cereal prices went up in Africa and all over the world. So therefore, as a part of our global monitoring, we do monitor China, Japan, Eurozone, US, all these countries.
Governor, I'd like to draw your attention to perhaps something which is very relevant, and that is the trade deficit and the CAD. Trade deficit at a record high, CAD at an alarming high level. If I look at the lay of the world, there is a slowdown. We can debate whether it is soft landing or hard landing, sir, but there is a slowdown, which will impact exports, which will impact global FDI flows into India, even portfolio flows into India. How are you planning to address that?
You see, according to our assessment, the CAD will be within manageable levels. On crude oil prices, today morning, of course, there has been a little bit of movement on crude oil prices. They have slightly hardened. But crude oil prices, now there are many experts internationally who are taking a position that the crude oil price will be below $100 per barrel. This was not in the realm of anybody's thinking a couple of months ago. There are institutions which are projecting $95 per barrel. We have in the Reserve Bank, in the MPC, we have assumed $105 as the average price for the current year. So therefore, according to our assessment, CAD, current account deficit, will be within manageable levels, and we will be able to finance it in a reasonably comfortable
Yes,
couple of minutes to explain why. The exports, Indian exports have picked up, and they're expected to do well in the coming months also. The exports in July came down, mainly that was confined to one particular sector, petroleum and petroleum products. Now the export tax has also been adjusted, has been reduced to some extent, and the expectation is that petroleum product exports will pick up and will do better in August. Yeah. But we have to wait till the end of the month to see the results. In the last 2-3 years, India has also entered new markets in terms of exports. India has also entered with products. I mean, India's share in the total global trade, or rather the volume of our exports in certain items, have also gone up over the last 2-3 years. The PLI scheme has also helped, and as we are sort of let us say, if there is a large economy which is slowing down, if indeed European continent is moving towards some people say recession, we have to see, but for a slowdown in growth, there will be a contraction in export demand. But when there is a contraction in export demand, at the same time, the global supply chain is so disrupted, it is also opening up new opportunities for Indian players to get into the global value chain. And I think many of our exporters and manufacturers and service sector players have been able to get into that, are getting into that global value chain in a bigger way than what they were, let's say 3 or 4 years or 5 years ago. So therefore, and coming to financing of the current account deficit, now the portfolio flows, which were, it was only outflow till the end of June. We are now seeing there were positive, net inflows in the month of July. And August, from 1st August till now, there have been consistently, there are inflows which are coming in. And that is expected to sustain. And as, as I think we were having a conversation before this interview began, I think internationally, globally also, international investors are looking at India with greater optimism. Just imagine, I said this somewhere earlier also, the country has witnessed 2 major shocks, 2 black swan events for the entire world: COVID-19 pandemic and the war in Europe. Despite these 2 huge shocks, our macroeconomic fundamentals remain resilient. Our financial stability is also maintained, and growth we are expecting around, according to our projections, it is 7.2%, and inflation is moderating. Capital inflows are, so there is financial stability, there is macroeconomic stability, and the country has withstood it. Not many countries around the world have done it. So therefore, I think there is greater investor interest in India. FDI has done, compared to last year, FDI has done slightly better. I think I gave the figure in the last MPC. It's about 13.6 billion this year from 1st April compared to 11.6 billion in the previous year. So therefore, I think all in all, current account deficit should be within manageable levels. That is our assessment. And we will be in a reasonably comfortable position to finance our current account deficit.
So Governor, if I put 2 and 2 together, which is your assumption that crude will stay above $100, crude is now below $100, inflation has peaked out. MPC has already spoken about inflation coming down to 5% in the first quarter of the coming financial year. So if I say that eventually the glide path for inflation somewhere in FY24 would be 4%, will that be a stretched assessment on my behalf?
Yeah, we have also said, this earlier. I have said it, and I think my colleagues in RBI have also said it, that, and we said this about 4 or 5 months ago, that we would like to bring down inflation over a, over a time cycle, over a, cycle of about 2 years or so. So therefore, if you say 24, I think by and large, I think what you say may play out accordingly. And you look at the projections which we have given in the last MPC, it's 5% in the, in the first quarter of next year, 5.8 in the last quarter of this year, 5% in the first quarter of this year, and thereafter it tends to moderate. But in between, there will be the effect of base, the base effect will sometimes work favorably, sometimes it may not work that favorably, I mean it may be unfavorable. But by and large, I think we are moving closer to 4% in a steady manner without, without much of growth sacrifice.
Governor, now Reserve Bank of India has always maintained that we are not worried about the real level of rupee, we want to trim the volatility out. Can you define volatility for us? Because each time press has asked you a question on rupee, you said, look, we are here to make the rupee stable, not volatile. What is your definition of volatility? Nobody's asked you this question before, so I'm tempted to ask you this.
No, I will come to that. But before that, let me also supplement, just by, let me also slightly, I would like to slightly supplement my previous answer. So with all this, I mentioned, about sort of current account deficit. I mentioned about inflation coming under control over a 2-year cycle. But then there's no room for complacency. I said this earlier. We are very watchful. We monitor each and every small incoming data. And given the kind of uncertainties which prevail, we have to remain watchful, and there cannot be a let up in that. So I just want to qualify.
You're on the front foot, sir. We understand that.
I just want to say that it's not as if, the war is over. The war in Europe is very much on. COVID has not ended. Even the United States is reporting more than 1 lakh cases per day. So we have to remain watchful. Now coming to what is our definition of volatility, many things are not possible to define in the classical terms, but it's a concept. Volatility means wild movements. We try to prevent volatility, check volatility in both directions, when the rupee is appreciating and when the rupee is depreciating. Now, in the last 2 years, there was considerable amount of inflows, forex inflows coming into India. Now, we did not allow we sort of started accumulating reserves at that time, because we knew that the cycle will turn and there will be a time when there will be an outflow of dollars. We have seen it in the past, so we have learned from past experience. So when the inflows were strong, we started picking up the dollars to build up our buffers. That was the first objective. The second objective is that we know that the wheel will turn. So therefore, if you let the rupee appreciate so much, then the wheel turns, then the fall will be very steep. So therefore, we like a more orderly evolution of the rupee exchange rate in both directions, when it is appreciating as well as when it is depreciating, basically to check the volatility, to check wild movements within a very short period. It should be a gradual movement.
But Governor, to do any inflation forecasting without a rupee level in mind is always going to be tough. So Reserve Bank of India will have to work with a band which they feel is the right band for rupee.
You see, we do factor in, in any case, the eventual exchange rate of the rupee vis-a-vis the dollar, it's a function of the market. And we do analyze that, how the rupee is going to, how the exchange rate is going to evolve during the current year, in the next 6 months and in the next 1 year. And in the monetary policy report, which we bring out twice a year, we do give out that number, the level at, what is our assessment, at what rate rupee to a dollar, what is the rate we have assumed for our calculations. So we give it out once in 6 months, and there is a reason for that also. Because if you give out rates every time, then sometimes, it can create very distorted expectations in the market also.
Governor, while credit growth is back, deposit growth is lagging credit growth. You've appealed to banks last time in terms of what kind of lending they should do. But is there something which needs to be done immediately? Because when we speak to even SBI, on a large base, they are talking about a 13-14% credit growth. and deposit growth is nowhere close to that. Would that create a mismatch which Reserve Bank of India now needs to address?
Now, what I said in the last MPC, I would just like to repeat that when credit growth, I mean the overall credit growth now according to the latest data, it's 14.5%. The credit growth that was as on 29th July year on year. So to sustain a 14.5% credit growth, you need capital. Thanks to our working very closely with the banks and nudging the banks, I think almost all banks, both public and private sector banks, have raised capital. You also need, as you have very rightly pointed out, funding resources coming from deposits. Yeah. Now, what I said in the last MPC, and I would like to reiterate that again, is that the banks will will have to, if they have to, achieve a credit growth of 13, 14 or 14.5 or 15%, they have to raise resources by way of increasing the deposit rates. And it's beginning to happen, it has happened. In fact, you see now very often, every now and then, some bank or the other, adjusting their MCLR, increasing their deposit rates. Today morning also I saw, yesterday, some banks have raised their rates. They have introduced new deposit schemes at slightly higher rates, because banks will have to raise their funding, the deposit rates, so as to meet their credit requirements. So it will happen. The credit growth is a little below 9% at the moment. It's about 8.7% or so. I think going forward it should pick up.
Since the government has a very big borrowing target, and in a sense you are the banker of the government to raise a bond from the bond market, when bond yields in April and June, when they were almost threatening to go at 8%, did Reserve Bank of India intervene, or you are okay with where the bond yields are right now?
No, the bond yields, I think middle of June, it touched about 7.6 or 7.62%. Okay. I'm talking about the 10-year.
Okay.
The benchmark 10-year paper, it touched about 7.62. Thereafter, it has moderated. So at the moment, I think the bond market remains steady. I think, as I mentioned a little while ago, inflation expectations have, have moderated. Inflation is actually moderating, and so at the moment, the bond market is functioning in a very orderly manner. We come in if we see some disorderly, developments, or some amount of disorder or disruption in the market due to various reasons.
Did you notice that in April and May?
No, it was for a few days. I mean, there is no room for a knee-jerk reaction by seeing the development just 2 or 3 days. We have to watch the situation and then act. But RBI intervenes only if it is necessary, and developments over a period of just a few days, that cannot be the determinant factor for taking action.
You've called crypto dangerous. You've used the word that it could create instability in the financial sector. But that was a comment when crypto price levels were very different. That was a time when the broad participation was very different. Things have changed at the price point and also at the participation level. What are your thoughts on crypto now?
No, I think I'm happy that we sounded those warning signals, and I would like to believe that a large number of people would have taken note of the warning signals and the concerns expressed by the Reserve Bank, and I would like to believe, and anecdotally we are aware that anecdotally that many people did not invest in crypto, or they sort of pulled out of crypto thanks to the the caution and the the kind of caution that and the concerns that emanated or that came out that went out of the Reserve Bank. And the crypto, we have said it earlier, it can create a lot of financial instability in terms of the ability of the central bank to determine monetary policy. It will upset. It will also have adverse impact on our exchange rate, on capital flows, on banking sector stability, and potential for being used as a tool for money laundering and for illicit transfer of money, and also it can, lead to, it will, knowing fully well something which doesn't have any underlying. And in fact, I said that at one point I said that it doesn't have any underlying, not even a tulip. Now something which doesn't have any underlying, the prices will not remain high all the time. So therefore, when it may crash, and it has crashed. So ultimately in a situation like this, it's the small investors who lose money. So therefore, it's a big risk for the small investors also. And the technology has got various applications, the blockchain, DLT or whatever you call it. The technology has got many applications. The benefits of the technology need to be capitalized. They are being already capitalized. The technology is nothing new. And so therefore, we flag those concerns. And in this countries like India, we are differently placed from advanced economies. When there is a talk of dollarization of economy, if I am sitting at the other end of the globe, if I am in the US, I will be very happy. But if I am in India, I would not be happy, whether as an individual or as a central banker. It's not a good thing for our economy to happen. So therefore, emerging market economies, particularly since all the cryptos are denominated in the dollar, hard currencies, by and large dollar, it will not work in favor of countries like India. It may work in favor of countries like the bigger economies, the advanced economies.
Governor, there seems to be a feeling that fintech in India will be more and more regulated. And for a sector which in a sense gets the innovation value to a country like India, which is creating jobs, which is taking the financial sector to a different level, why is there a perception that Reserve Bank of India wants to regulate the fintech more?
You see, fintech, we are in fact encouraging fintech. We have set up an innovation hub in Bangalore. We have, you look at the large number of steps that we have taken and the latest, the digital lending, the regulatory framework which we have come out, it's largely supportive of the fintech sector. If you allow a new thing to, we have to see any innovation, what kind of risks it's bringing into the economy. And those risks will have to be mitigated. Unless the regulator acts, you will have uncontrolled risks developing. I'll give you a very simple, commonplace example. Every innovation has value. Let us say, I'm an innovator and I innovate a high-speed car. And I feel that my innovation, this car is the best, it's the best thing that has happened. And yes, it's definitely a very good innovation. We appreciate that. But I have to drive that car in the roads of Mumbai or in the roads of any Indian city or in the Indian. Now, I cannot say that, look, I will drive at 200 kilometers at speed. Forget about the pedestrian, forget about the other traffic, forget about the speed breakers, forget about rest of the road. So the speed of my car has to be regulated. So it's precisely that. So therefore, regulation comes in. We encourage innovation. We are committed to encourage innovation, especially in fintech. We will be supportive of innovation. We are always supportive of innovation, and we have been engaging with, that particular ecosystem, the main players in that ecosystem. We are working with, we do interact with them quite a lot. At the same time, we also try to assess what risks it is building up for the system, for the economy. And those risks will have to be addressed, not by the regulator, but the regulator will tell the player himself. The players will have to, address those risks. And as a regulator, it is our responsibility to see that there is no unknown risk build up, there is no unbridled, unchecked risk build up, because ultimately the negative consequences and the impact of that will be hugely adverse. So therefore, it has to be an orderly regulated development. But through your channel, I want to very clearly say that we would encourage innovation. We are supportive of innovation in fintech, But at the same time, we have to evaluate what kind of risks are coming in, what kind of risk buildup is happening, and whether they are getting addressed or not.
Now, Reserve Bank of India recently, last week, floated a paper about whether the payment gateway UPI, should there be a charge there or not. The government has come up with their own views on that. Do you think an innovative payment gateway like UPI needs to be charged? It's a service. It's like saying if I was using money order and demand draft, the customer ultimately was paying.
You see, we have come out with a discussion paper,
Yes.
and our idea was to get stakeholder comments and suggestions. So let the comments come, we will examine them and move forward.
If I could request you to clear the air on RBI stance on PSB privatization. Post circular, RBI did come out with a clarification, but PSB privatization in India, why is that good?
You see, as a regulator of the banking sector, we are neutral to ownership. That is the stand of RBI, and that is our, that is the bottom line of our stand. We are ownership neutral. We prescribe certain regulatory guidelines, and it is our job to ensure that those regulatory guidelines are adhered to, and the banking sector, banking sector functions in an orderly manner, in a well-regulated manner. Banks are robust, they are well capitalized, their financial parameters should be strong. So we are agnostic to ownership, we are ownership neutral, and in fact on the issue of this latest thing which you are mentioning, that's a bulletin paper produced by some of our researchers. It does not represent the official view of the RBI. But I think there was some amount of misinterpretation in the market. If you read that sentence carefully, they have said a big bang privatization may not be as good as following a orderly and calibrated approach as is being done by the government. So the first part of the sentence was cut out and the latter part of the sentence was cut out, and only one thing was taken out of context. And so we thought, and since it was being attributed to RBI, we wanted to clarify. We didn't clarify incidentally, we just simply said that it's not the official view of the RBI, and we only said that the authors, the researchers have only said this, they have not said anything beyond. The official stand of the RBI is that, I am telling you, is that we are ownership neutral. The owners of the bank, it's for them to decide how much of shareholding they want to retain, how much they want to, the others, the public or whoever wants to own. Our regulations are, ownership neutral.
I'll take the liberty of extending my appointment with just some follow-up questions. According to the regulator, given that big banks are becoming bigger in India, they have technology, they have brand, they have reach, small banks are not getting marginalized, but they are not growing. Who has the right to win in the financial sector?
Who has?
The right to win.
I think it's the market. Everybody, the small banks have to survive in the market and they have to become more agile. In fact, some of them are quite agile. Let's not think that sometimes two large banks also can develop an amount of inertia. So therefore, size of the bank would matter. I'm not saying it is totally, I'm not saying it's irrelevant. It is relevant, but I think the efficiency of a bank depends not so much on the size. The efficiency of the bank would depend largely on their agility, on their risk assessment, on their, governance. It depends on what kind of governance they have. It depends on what kind of technology leveraging they are doing. It depends on what kind of risk management practices they are following and what ambitions they have to grow.
Governor, you had to deal with extraordinary circumstances, a war, a pandemic, liquidity like never before, inflation like never before. And I've always said that if a pantheon of great governors had to be made, your name would be on the pedestal. But for you, sir, who is your favorite RBI governor? Who has influenced you the most?
No, I think there have been, many of them. It's not fair on my part to sort of comment on my predecessors, or for that matter, when I move out to comment on my successors. I think all of us follow that kind of understanding the governors past, present and future. I think that understanding prevails. It will not be fair on my part to do that. But I think what is more important is RBI as an institution. You see, governors come and go. What is more important is what contribution we are able to make to the institution and how the institution responds to challenges and how the institution is able to maintain financial stability and fulfill whatever is expected of the institution. I would therefore give greater importance to RBI as an institution than individual governors.
Do you ever get a Sunday, sir?
And I mean that. Just don't take it as a diplomatic answer to your question. I really mean that.
I appreciate that. Is there a Sunday in RBI governor's life?
Well, I mean, there are moments when one has to sort of, take a little bit off. And yes, I mean, it's not. I think we have, on a serious note, we have an excellent team. And it's a teamwork which sometimes gives me some breathing time to just step back and use that opportunity to put things together and just think about what next to be done.
Just to wrap it up, one final question. COVID crisis has been tough for all of us personally, even in terms of, we have all had to take very tough decisions, very radical decisions. When you recall those dark moments of COVID, what was the toughest decision you think you took? When did you get that sleepless night? You got worried?
Well, I would not say that. I don't have sleepless nights. I get my good night's sleep. But when we see some signs of financial instability coming in, and you feel that it can cause a huge impact on the economy, that is the time to, when we have to really, we get greatly concerned. Difficult to say what is the moment, because initially when pandemic started, everybody thought that it will last for maybe 3, 4, 5, 6 months, but then it became persistent and very difficult to sort of pinpoint what was that moment. And if there was any, 1 or 2 points came to my mind, but let me hold it back for a memoir if I ever write it.
So well, I look forward to that memoir, Governor. Thank you so very much for accommodating in this interview request. Thank you for having us over. Thank you.
Thank you. And thank you to your viewers also. Namaskar.
That was brilliant.